Hey there, and welcome back to another video on investing in stocks. Today we're talking exchange traded funds, ETFs, which is a great way of getting invested in the stock market. They offer great diversification and good potential for returns. These are 6 that I think are going to be the best ones going into the future for the next 2, 3, 5, 10, 50, 100 years. So let's get to it. Now, there's going to be a little bit of everything. I'm going to have some US, some Asia, some tech, some non-tech, some high dividend, some low dividend, some expensive ones, some affordable ones. And before I begin, if I were to invest in ETFs, I would definitely go with broad ETFs for big markets. ETFs is a great way to spread your money out between great businesses, get a decent return, and you almost don't have to pay any expenses. So without further ado, let's get down to the list. So we're starting off with iShares Software Tech ETF. So this is the software side of tech, which is going to exclude hardware basically. Now it has an expense ratio of 0.47, which is just in the middle there somewhere, and it has a yield of only 0.13, which is basically nothing. But tech usually offers very little in the ways of dividend. So this ETF is going to hold companies like Salesforce, Microsoft, Oracle, Adobe, and so on. So these are, cloud services, creative services, or the Office package, operating system, stuff like this, which is obviously, big data analysts, which is going to be huge in the future. And all companies needs software, and they need data analysts, and they need programs to keep all their information and to analyze it and to distribute it to people. They need email servers and so on. They need websites, they need tech support, and these are the companies offering just that. One of the biggest ones would probably be cloud, all sorts of cloud and big data analysis. I think that's very important going into the future, so I think this can be a great play. Moving on to Invesco's CQQQ, which is China Tech ETF. I used to be invested in QQQC, but I couldn't find it anymore, so I went with this one. So this is going to be an expensive one, prepare yourself. It has 0.7% expense ratio, but it does have a 0.36% yield. Take it for what it is. Again, tech don't usually offer that much of a yield, but China is where it's happening right now, and some of the biggest companies and the fastest growing companies are just this. It's tech companies, and all of these hundreds of millions of people, they live their lives on the internet. They don't have much in terms of space, so a lot of things are going on online, and they have a big push with people coming online and discovering all these services and social networks and video games and cloud storage and so on. And again, Chinese businesses, just like Western businesses, are going to need all these tech services. So this ETF is going to hold companies like Alibaba, Tencent, Baidu, NetEase, JD.com, Sina Corporation, and so on. All the good stuff. I think every investor should be invested in China, and this is the perfect way to do so if you don't want to go with only Baba or only Tencent, which can be maybe a bit scary because China is a very, very volatile region. Moving on to Global X's Automation and Robotics ETF, BOTZ. Automation and robotics might be the biggest trend in the future, and although it's very difficult to pinpoint, I think this is the way to go. It's very expensive at 0.7% expense ratio, and it only has a 1.14% dividend yield, which is something to go on. And this company is going to have companies like Intuitive Surgical, Keyence, Mitsubishi, ABB, Omron, Nvidia, and so on. So these are automation software, robotics, and chips to manufacture, operate, and develop robots and automation processes. All manufacturers, everyone are going to need robots and automation. So this is a pretty obvious play. And again, difficult to invest in this specific trend, but this is the way to go, in my opinion. It's a pretty safe ETF, some very massive companies. There's mostly Japanese, some Swiss, some German, and some US companies, so very high quality companies right here. Moving on to the one and only Vanguard's SP500 ETF, VOO. This is the ETF, #1 ETF. It's not the biggest, but in my opinion, this is the best ETF in the world. 0.04% expense ratio, so it's basically free. 1.85% dividend yield, which is great. And this is going to have all the largest companies, which are all tech companies now. Apple, Amazon, Facebook, Berkshire Hathaway, Alphabet, JP Morgan, ExxonMobil, and so on and so on. This is the #1 go-to ETF. The US has always led the way, and I think that's gonna keep being the case. And if you only buy one ETF, this is the one to go with, in my opinion. And moving on to the other one you can put all your money in, Vanguard High Dividend Yield, VYM, one of my all-time favorite ETFs. So it's going to be large companies, mostly S&P 500 and Dow Jones Industrial Average, but only the ones paying a lot of dividend. So this one is going to have 0.06% expense ratio, more or less free, and it's going to have a 3.09% dividend. So it doesn't get much higher than this unless you want to get into REITs and so on. So this is going to have Johnson & Johnson, JP Morgan, ExxonMobil, Pfizer, Procter & Gamble, Verizon, AT&T, and so on. Not my bag of stocks, but if you like dividend, this is the one to go with. Again, I think VOO is a better option. You get better growth and you still get some dividend. This is mostly dividend. These companies are not doing too well, but they're some of the world's largest companies and they're not going anywhere. I mean, Johnson & Johnson, JP Morgan, AT&T, not going anywhere, as I said. And most of them have been growing their dividend for a long time, so keep that in mind. Now moving on to the last and final one, which is going to be iShares All Asia X Japan. So these are all Asian countries except Japan. Japan is considered its own territory because it's so highly developed and they have a massive Tokyo Stock Exchange, and Japan is the world's highest developed and technology sort of country in the world, so that's why it's considered way different from the rest of Asia, which is mostly underdeveloped. Japan also has their own way of running their economy, and they have a very slow GDP growth, and they're mostly tech based, so it's a bit special there. So it's usually classified into Asia Pacific and then Japan on its own. In fact, the Japanese ETFs are larger than all the other Asian ETFs combined. So it's going to have 0.67% expense ratio. Again, it's a bit of a niche, so a bit more expensive. 1.92% dividend, so that's actually very decent, very respectable. And it's going to have companies like Tencent, Alibaba, Taiwan Semiconductor, Samsung, Aya Group, China Construction Bank, and so on. Some of these companies are companies you cannot invest in the US. Some of them are on the Shanghai and Hong Kong Stock Exchange. So do keep in mind that this is a way to invest in some companies like Samsung that are not easy to invest in otherwise. And some of these companies are only offered through over-the-counter options in the US or special deals. So again, another great way of playing the growth in China, which is one of the big trends. And since Japan is not really growing, I mean, their population is not growing, their GDP is not really growing, Japan is more about picking these really high-tech companies. This is a great way to play the rest of Asia, and you get a bunch of China in there. Don't worry about it. China is the place to be, but here you get some Indonesia, Philippines, India, and so on, and maybe some Singapore and Taiwan. These are 6 ETFs I do really believe in. I don't own any of them, but I could. These are ETFs that you could put all your money in and still sleep well at night. And in this, you're covering software, which is going to be, you know, the running the internet basically. You have robotics and automation. You have the good growth in China, and yeah, and then you have some overall dividend cheap US ETFs. So you can't go wrong with this. Let me know what ETFs you guys like. Let me know if you want me to do more ETFs videos. As always, I'll see you in my next video.